Hey everybody, how are you? It's Yvette Best from Best Services Unlimited, and today I'm here with Tax Tip Tuesday, and we're going to be talking today about the 8 common mistakes that reduces tax refunds. Now, most of the time, people will come to the tax office with their W-2s and are not aware of the surprise they're going to get when we finish putting all of the paperwork and getting their numbers together. They may have a change in their status, a change in their family. Somebody they may have given birth to a child might have been grown and was in college and now are on their own. And a lot of times there are things that they do, like taking money out of their retirement accounts, that will actually reduce your overall tax refund. So these tips that I'm giving to you is coming directly out of my book, which is Maximizing Your Tax Refund. It is available on Amazon. And if you have Kindle Unlimited, you can read it for free. So the thing about it is, I wanted to come and let you know that 8 common mistakes that people make that actually reduces their tax refund that they should be aware of, but sometimes people just don't know. So the first one is that credits are worth more to you than tax deductions. I know you're like, wow, when I'm in business, I have tax deductions. It lowers the amount of money that I have to pay for taxes. But in actuality, credits really lower your taxes dollar for dollar. And then tax deductions lower the amount of your tax liability based on the bracket that you're in. So for example, if you had $2,000 and you had a $2,000 credit, you would actually lower your taxes by $2,000. But if you had a $2,000 tax deduction and you were in the 10% tax bracket, you would only get a credit for $200. So although credits and deductions are incentives to reward you for behavior, for having a business and also having children or other things of that nature, credits are the way to go when you want to, number one, lower your taxes and increase your refund. So number 2 is not being informed about what deductions you are eligible for. Now, this is an information age. Everybody will Google to death to try to find out deductions, but some deductions you may read about may not be for you. And then you may feel that you qualify for them, but when you get to the tax office, or even when you're using any type of online tax software, you will not be eligible for those type of deductions. Then there's things in your business that you should be taking and you may not know about it. So you may be a trucker but didn't know that when you go to take showers while you're at work, when you're on the road, they're deductible. You may not know about per diem rates, that they change from state to state, and you're not keeping track of those different per diem rates. So you may not be getting the full amount for the per diem rates as you're taking them as a trucker. If you're in business and you're a baker and you're not keeping track of everything that goes into the product when you're making your cakes, you may lose out on critical deductions that is good for your business. So number 2 is not being informed about the deductions that you are eligible for. Number 3 is not showing your numbers. So there are people who are really out there still filing their taxes by hand. So you want to make sure that the writing that you put on these returns are clear, legible, and then also making sure that the numbers that you're putting are more exact. So like saying $1,200 for advertising, and when it actually might be $1,232, be a little more exact with your numbers. So you want to make sure you show your numbers. So if you're doing it by hand, making sure that the handwriting is legible, but also be a little more exact with your number instead of just rounding them off by hundreds, because that's one of the reasons why some returns may be called in for an audit. Then 4, claiming deductions and credits that you are not qualified for. So I will tell you right now, just claim what is yours this tax season. Do not allow anyone to take you into a situation of claiming things that you are not eligible for because they know. And like I said, you may get away with it 1 year, maybe 2 years, but then the third year comes, I always say, audits are like jury duty. One day your number is just going to come up. And then what happens is if they can find that this one return was wrong, then they look at the pattern in your other returns and then call all of those returns into question. And that could add up to some big money. So it's just not worth the headache. The little bit of money that you're getting in these refunds, extra for claiming these credits and debits that are not yours, just forget about it. Just claim what is yours this tax season. That way you can stay out of trouble. And number 5 is being loose with your numbers. And I talked about that before, about making sure that you're not showing your numbers, but also being loose with the numbers. So remember I said, don't take and be writing 1,200, 300, 400. Try to get exact with the numbers. If it was 345, claim 345 is more than 300. But also not making sure that you're more exact with the numbers instead of using these straight numbers, which may actually cause the logarithms that's used when we are electronically filing these returns to have them take a closer look. So number 6 is trusting untrustworthy people. So we all have that guy or that girl, the one that everyone talks about, that you go in and you get these amazing refunds. Make sure you know what is on your return, because when you sign the return, that return belongs to you legally. Now, let me be clear. Tax professionals are getting locked up left and right for doing fraudulent returns, but they get locked up. But you as the taxpayer will be left holding the bill to pay back to the IRS. So you want to make sure that you know what is on your return. So if the refund sounds too good to be true, 9 out of 10 it probably is. And you need to be sure that when you put your name on that return, that you know for sure what is on it. Because when the IRS comes back to see you, even if you say, I did not know what was on my return, that will not be an excuse for why you're not going to pay them back that money. And for the thousands of people I know who have had these issues, especially here in Atlanta, when we just had like maybe about 10 people locked up this year for tax returns, and they're all scrambling around, amending returns, making payment arrangements, offering compromises. It's just not worth it. And then number 7 is not saving for the future. So you want to make sure that, the government pays you to save money. So, you get the deduction for when you give money to your traditional IRA. And that's up to $6,000 this year, $7,000 if you are over 50. So if you're not saving for retirement, this is a great time. And then also, it is the one deduction you can take up until tax day. So if you haven't done anything last year to lower your tax liability, this would be the time to invest into a traditional IRA and get that deduction. And even if you're covered at a plan at work, you can still exercise your option to have a traditional IRA. And then last is not keeping receipts to support your numbers. So you always want to keep receipts for anything that you deduct on your return for as long as you have your return. Now, they will tell you 7 years, but in the event that they may think that you are doing something fraudulent on your return, you just want to have all your receipts. It's just better for you. It's better for you. It's better if, in case you get called for an audit, all of those things will come into play. Now, my bonus for you, because I always like to give a bonus, is please, if you take any money from your 401k, IRA, Roth IRA, please withhold federal and state withholding. That is probably by far the biggest way I see people lose on their tax refunds. They get money from their 401k, they have no federal and no state take it out from it. And that money in its entirety is taxable to you. Also, you get a 10% penalty if you're under the age of 59 and a half. So please, if you don't do anything else, if you get some money from your 401k, traditional IRA, Roth IRA, if it's not in the non-taxable status like you did it before 5 years, or you're taking out the principal before the 5 years, please make sure to take out federal and state withholding. And my caveat for that is 20% for the federal, and then whatever your state is. So if you're here in the Georgia area, I just tell people do a straight 7%. So that way you know that you're covered on both sides. And if you get money back from that, that's fine. But at least you're covered when it comes time to be able to do your taxes and make sure that you are covered on both sides of the ends, because that is the number one reason that people refunds are taken. So I just want to recap on the 9 steps that we talked about today. So the 8 common ways that when people make a mistake is 1, not understanding the amount you are spending when you get a deduction as opposed to having a credit. Number 2, not being informed about what deductions that you are qualified for as well as credits that you are qualified for. Number 3, not showing your numbers. And then number 4, claiming deductions and credits that you are not eligible for. Remember, only claim what's yours this tax season. And then number 5, being loose with the numbers. Number 6, trusting untrustworthy people. Number 7, not saving for the future. Number 8, not keeping records to support your numbers. And 9, lastly, please make sure that you have federal and state withholding from any retirement accounts that you take withdrawals from. So if you want to know any more about those tips and others that I have, this all comes from my book, Maximizing Your Tax Refund. It is available on Amazon. And it's just a way of just saying to tell you how to actually, 1, get more in your tax refund, or 2, keeping more money in your pocket during the tax year. Because I'm not really a fan of refunds. And the thing about it is you're just basically getting back the money that you let them hold interest-free all year long. And there's so much more you could be doing with your money during the year. You could be spending it on your kids or putting it into an investment account. So please take and do that. And of course, it starts with chapter 1, which says, is bigger better? So make sure you read that, because that really will change your mindset about how the refunds are and how they work. So again, this is Yvette Best from Best Services Unlimited, coming to you with the 8 common mistakes that reduce your tax refund. And I thank you for coming in and tuning in. And please continue to just change your mindset. It's a new year, new decade. Just continue to do well, be well, and stay strong, because a lot of times you are embarking on something new and you'll have a lot of people pulling you back to your old ways. But just stay strong, and if all else, pray. You will make it. I believe in you.